Okay, here we are. We're ready to trade. Let's start doing some analysis and decide whether we're going to make any money this month on these charts or not. We're going to start off here, and first thing we want to do is we want to look at our corn contract, and let's do some analysis. What do we think about this chart? First thing I see is that this thing is in a nice long downtrend. You know, not perfectly straight. Makes a little crook right there, and then maybe another one right in here. Looks like it has a nice little trend right in the bottom. You know, see how all these areas of support are coming across the bottom right there, and then it broke through the area of support on the bottom. What about the top here? We've got kind of a little, narrow type of a thing happening here across the top. Is there anything in there that makes you want to buy or sell or do anything? I don't see anything in particular that makes me want to jump into this market right now. Maybe what we're looking at here is a new annual low. We're always watching for new annual lows, so maybe that's a 1, 2, 3 bottom formation, because annual low is always considered a number 1 point, so that would be a number 1 point right there. I guess the best we could do at this point is just wait and see if a 1, 2, 3 formation comes out of this. So, we could go through and look at a number of these different tools. Maybe we could come through and run a GAN fan on this. We could put a GAN fan at maybe this peak here and see if this is a strong trend. We have to, of course, square our GAN fan. That's such a long trend right there. Now we have to keep the GAN fan perfectly 45 degrees, so we have to pull it down through all these squares so that 1-to-1 ratio always stays. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 squares compared to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we're perfectly squared there. And that should tell us now that fan coming off that point right there, whether that trend is strong or if it's fading. And it looks like it's a pretty strong trend. It's staying pretty high. A normal trend would come right down the 45-degree angle. So we're kind of coming backward, losing a little bit of our downward energy out of this trend according to our GAN fan. So we might want to consider that when we're trading this market. But for right now, I'm just going to watch it come down this trend, and I'm looking for that 1, 2, 3 bottom formation. Let's go on to feeder cattle. And in feeder cattle, we got a nice little top up here. Look at this nice little top. And it came down to this bottom, and then look at that, it came right back and made a nice beautiful 50% retracement. Boy, you couldn't get any, you could use that in a manual. That's perfect retracement. I'm going to drop this down here a little bit so we got a little bit more room to see. But then it kind of started going sideways here, and it hasn't really done much since then. So do you see any trading opportunities here? Maybe a little bit. There's kind of a trend coming across the top here. What do you think of that? Look at that. All of those 1, 2, 3, 4, 5 times it hit that top, that little area of resistance, but it never did break through. But then look down here, we had a pretty nice little area of support right in there. Looks like probably I'd call that the area of support right there. Looks like we were probably going up a nice little wedge formation, and it dropped out of the wedge formation a couple weeks ago. But it looks like, if we wanted to trade that wedge formation, we've missed our opportunity, haven't we? So I don't see anything happening here. We've kind of missed our opportunity on feeder cattle, it looks like, on that wedge formation. And of course we missed it on the retracement of that 50% drop. So right now, I don't know, it's just kind of going sideways, not a lot happening. This market's not too exciting to me today. Maybe we'll have to just wait and see what happens. Nothing really happening there. So let's go on to the next one. Let's go on to gold. What do you see here in gold? Gold, well, maybe gold's got something happening here. We've got a couple little highs there, little double tops. How far back has it been since it's been that high? A lot further back than this contract. So those being tops, of course, those would be annual highs, and that top one there would be our number 1 point. And it looks like this would be a nice little number 2 point and a nice little number 3 point. So, are you excited about that? You want to trade that little 1, 2, 3 top formation? What would we look for on that? Let's look at a 50% retracement. Figure out if we want to trade that. That thing's already dropped back down to its 50% level. The number 2 point was the 50% level. Now remember, in our studies we've learned that a 1, 2, 3 formation is a reversal of a trend. And there's not much of a trend here. I mean, it jumped up quite hard and turned around and came back down. We have to decide if we really want to take that risk. And one tool that we've got here to help us make that decision would be our risk-reward tool. If we wanted to place our stop-loss order behind the number 3 point and an order to enter on a break below the number 2 point, we'd be risking about $1,000. For how much potential profit? Well, it depends on how far the market's going to go. What if the market goes up and breaks past this point here, or at least meets it? That's an $840 profit. What if it comes down and makes maybe a 50% retracement of this move right here? We could expect it to come down, not any profit on the drop and on the bottom side, but maybe if it dropped down here and just went back halfway between the bottom level and where it drops through, maybe this could be a target for us, a $940 profit. So are you willing to risk $1,000 roughly, on a potential gain of maybe $1,000, $940 to $840 going up the other side, the top side? You have to decide. That's one of the decisions you have to make. Is that a good risk for you? I'd say no. Most people would say no, but we may decide to trade this one. Let's go on to lean hogs. What do we see in lean hogs? That's a nice uptrend. Look at this uptrend. Right up there. That's pretty sweet uptrend right there. It's come down and it's hit that 1, 2, 3, 4, 5, 6, 7, 8 times. And now it's gone on the other side though, so maybe if we were looking at here again, maybe this is an annual high. Yeah, this is an annual high, so maybe this would be a 1, 2, 3 top formation here as well. 1, 2, 3. Maybe we want to trade that one. I don't know. It looks like more to me, rather than an annual high, it looks more like maybe we could call this one here a head and shoulders. Head and shoulders formation very similar to a 1, 2, 3 formation. But notice how this line is coming across here, and we touch on these bottoms right here, these areas of support, and look at that, we got 1, 2, 3 of them touch this area of support right here. So if this broke down past this, what we call the neckline on the head and shoulders, that would be a sell signal. Now I'm liking my odds on that one. I like head and shoulders formations. They're pretty nice. I'm a little weak on the 1, 2, 3 formations, but I like head and shoulders a little better because of this left shoulder out here. It gives me another point of reference to decide whether I want to get in or out of this market on a nice area of a nice trending area of resistance to break through. And then let's look on this one. We've got a nice little 50% retracement level would take us back to this point here. Let's run a risk reward. If we dropped in a stop loss order behind the right shoulder, sold the contract on a break below that trend line right there, or the neckline, and got out down here at 633.44, right in that area, 50% retracement of that last move, it'd be about $1,000 profit. You have to, there again, you have to decide if $600 risk is worth $1,000 profit. A lot of people will tell you they want that to be twice, so you'd have to look at a $1,200 risk for $1,000 profit. We're close. We're there. We're in the ballpark. So let's take a look at that one. Let's go on to live cattle. And what have we got happening here in live cattle? Again, we're looking back here. We're seeing a nice 50% retracement. This is very similar to our feeder cattle. This is what we call a family trade, where you got feeder cattle and live cattle, which are basically the same thing, so they're going to travel very similar. But don't get caught up in that, because sometimes I can show you example after example where they broke apart and went totally opposite directions. But for the most part, keep in mind that because they are a family, they're going to travel very similar. So feeder cattle, live cattle are going to travel very similar. Soybeans and soy meal are going to travel very similar. Wheat and oats are going to travel very similar. Silver and gold are going to travel very similar. So you got your families, but every time just when you think you're comfortable knowing that these things are going to travel together, and because one did it, the other one's going to do it, that's when they break apart and take all your money. So you always have to watch each one individually as it is its own entity, but yet rely on the others as types of indicators to kind of help you know which direction they're going, because like feeder cattle will go ahead of live cattle sometimes. So if feeder cattle makes a move, live cattle will follow, or vice versa. Sometimes live cattle will make a move and then feeder cattle will follow. So you want to look at them and see what happens. Sometimes wheat will make a move and then oats will follow, or oats will make a move and then wheat will follow. So you want to look back and forth in these families and see which ones are the dominant family member. Like in gold and silver, gold is generally the dominant. Gold will move first and then silver will follow. So keep that in mind. We're looking at this live cattle contract, and what we're seeing here is a nice little rounded top. But what I'm seeing here is a little head and shoulders formation again. We've got a nice little head and shoulders formation happening right in here. And something like that. This again would be a break below that trending line, and if we look back, look at that line trend all the way back this direction as well. We got kind of a nice little area of resistance, or area of support, all the way across that neckline right there. So that neckline to me is quite a strong area of resistance, and if that market breaks past that area of resistance, that'd be a good indication that it might continue down. And where we've already looked at the live cattle market, or the feeder cattle market, maybe that's something we want to look at. Here we're doing the same thing. We got a 50% retracement. Oh, back to here. That's not a very far drop. And actually it's not there because we're going off the wrong top. We've got to go off this top here. So that's where we'd be back to as a target point. So we're risking $640 for about a $690 profit. There again, are you willing to risk the same amount of money that you have potential profit for? I don't know. You have to decide. Most people again say that should be a $1,280 reward area for a $640 risk. So it's your style of trading. You have to decide. Of course, if you're looking for those that much of a profit potential, you're going to limit yourself out of a lot of opportunities to trade. But of course, that could be good. In limiting yourself out of those opportunities to trade, you also limit yourself from losing on losing on something that may not be a good trade for you. Let's go to oats and take a look. Now, what do we see in oats here? Nice big long uptrend in oats. If I look at that, I see oats has been doing some pretty crazy stuff here. It's been going into pretty nice little triangle formation, but of course we already popped out of the top of that triangle formation. Look at this little triangle formation back here. And then where's something else? Look at this one. This is further back, but still. Another little triangle formation that it's made here. Nice little triangle, or wedge there, and then there's little pennants coming in here, and then a little triangle formation coming in here, consolidation period, and it just keeps jumping out the tops of these things. And here's another one it looks like it's forming here. I don't know. Do we want to trade that? The thing is, you don't want to lose your opportunity. If you see something like this and you think, gee, that's a little pennant or a little flag, I might want to trade that. You don't want to wait too many days, because then it might take off and go without you. And you don't like chasing markets. That's not so good, because once a market breaks and runs, then you start chasing markets. You really don't have as good an opportunity as you do as if you can catch it in the beginning. So it's not recommended that you chase a market. So you don't want to miss an opportunity either, and you don't want to jump in too quickly. Let's go to silver. Now this silver contract is one that looks like something should be happening. I mean, this thing is beautiful. Look at that uptrend. My goodness sakes, you could write a manual on this one. That's the most perfect little beautiful uptrend that you could ever find, you could ever hope to find. That's picture perfect. And then it came up, it made its nice little perfect retracement level back, broke the 50% level, but now it's just kind of going sideways. So what kind of opportunities do you see here in silver? Anything? You know, it looks like maybe trying to make a little triangle formation here. You know, maybe there's something there with the triangle formation. I don't know. Let's watch that one. Now we're down here in wheat. Now what's wheat doing for us? Now look at this wheat contract. This has got to be one of the most amazing things I've ever seen. Look at this wheat contract. I'm just going to come right over here and I'm going to draw a few formations for you. Look at this. Beautiful little head and shoulders right there. Break above that neckline. And then look what it did right over here. Another beautiful little head and shoulders. Look at that. Break above the neckline. Take off. And look at this one. Another little head and shoulders. And of course that one broke across that neckline. It retraced on us back, but then it continued on down in that long formation. You know, heck, maybe we would have called this the neckline. You know, it's hard to tell after the fact, but you know what you would have done at the time without seeing the whole chart. But in hindsight, you know, you can look at these things and say, wow, look at that. Head and shoulders, head and shoulders, head and shoulders. 1, 2, 3 of them right in a row. You know, what's happening here now? It's just kind of dropped down into this little downtrend. You know, almost a little triangle or a little flag right there. See, it dropped out the bottom of that flag pretty hard. Generally does. When things drop out of triangles and flags, they go quite hard. Now we're coming back up a little bit, now retracing down. You know, any opportunities here in wheat? You want to jump in with an order anywhere? That's it. That's the first day. Now we need to we've gone through and we've done a little bit of analysis. We haven't done a whole bunch of analysis. We haven't used all these neat tools that we've got here. We haven't used Fibonacci rules and retracements, and we haven't looked at our day and arc calculators and our time zones and all that stuff. But we have gone through and done a you know, looked for some reoccurring price patterns, and that's the first step in doing our orders. We want to find our reoccurring price patterns, and we're going to stop here and we'll go on to the next order, the next file.